Welcome back, traders. It's been a great weekend for Japan's Prime Minister Takaichi, who celebrated a historic election victory on Sunday. The yen weekend on the news before currency talks fueled some strength back to the currency. Meanwhile, currency talks have also emerged in the Eurozone after the ECB showed some discomfort around the Euro's recent strength. But the week ahead might be more about US data releases. US retail sales will be out on Tuesday, followed by the delayed non-farm payrolls report on Wednesday, while on Friday, all the attention will be on these US CPI inflation figures. And don't forget about geopolitics. It seems that tensions between the US and China are back into play after China showed support over Iran's nuclear program, while the US accused Beijing of conducting secret nuclear tests back in 2020. So geopolitics may remain a key topic later this week as well. And now let's have a look at what the technical signals suggest about USDJPY, Eurodollar, and gold. So starting first with USDJPY, we can see that the pair hit an almost 3-week high of 157.64 after Takaichi's election victory, but then talks about a potential FX intervention from Japanese officials brought some weakness to the currency earlier today. So the pair is back within the 156 zone. Nevertheless, it's still supported above its 20 and 50-day moving averages. So that provides some optimism that the rebound is still likely. Nevertheless, looking at the technical indicators down here, we don't have an actual clear bullish bias. The RSI has pulled back towards its 50 neutral mark. The stochastic oscillator, it seems that it has peaked above its 80 overbought levels. So that suggests that downside risks may remain in play, and once the price breaks below 156.15, I expect an extension back towards the 154.80 zone. That's where the 23.6% Fibonacci retracement level of the uplift from April to January is placed. While lower than that, I expect another crucial battle within the 152 region where the price pivoted back at the end of January. Now, in the event of an upside move, and that perhaps could come if US non-farm payrolls come in higher than expected. Expectations are for a moderate jobs growth of 70,000 from 50,000 previously. The unemployment rate is expected to hold steady at 4.4%. While average hourly earnings may ease a bit to 3.6% from 3.8% previously. So overall, it's going to be a neutral report suggesting that perhaps inflation dynamics wasn't a concern in January, but for that, investors may pay more attention to Friday's CPI inflation figures. So let's see if the data will support further monetary easing in the US, as the new Fed nominee Kevin Warsh has increased speculation that perhaps he may be less dovish than what analysts expected before. And it would be interesting to see if he will manage to deliver Trump's demand for lower interest rates in the coming months, well, after May, when he actually takes the Fed seat. Now, if we get better than expected data out of the US, with the US dollar bouncing back northwards, then expect another test near the 159 level. But that could be a caution area, as FX intervention risks may emerge around this level, especially if the price manages to surpass the 160 mark. And now looking at, let's turn to Eurodollar, because the currency is showing an outstanding performance today. It moved as high as 1.1825 as high as 1.1868 earlier today. The focus, well, Eurozone's calendar is more or less quite empty. The second estimate of GDP growth figures for the fourth quarter will be out on Friday, but those may not cause strong volatility. In the meantime, any currency talks may attract special attention, and perhaps any further strength in euro dollar could make investors a bit cautious after the ECB showed that it's not a very that it's kind of discomfort with the euro strength, as the eurozone is trying to enhance its trade deals with its foreign partners. So a more competitive currency is, it seems that it's more preferable in the eurozone. So any currency talks could make investors sensitive in the coming sessions. Now, as regards the technical signals, it seems that the pair is still looking bullish. The RSI is above 50. The stochastic oscillator is about to rebound near its 20 oversold level. And given the rebound near the 20-day moving average, that is a great technical cocktail for euro dollar to continue higher. Now, whether the pair will manage to cross above 1.19, that remains to be seen. If it managed to do that, then the next target could be the 1.9070 or 1.20 region, while higher than that, the next barrier could emerge somewhere between 1.2050 and 1.2077. That's where this tentative resistance line from June is placed. So perhaps another pullback could happen within this territory. Now, in the event the price reverses to the downside, if it fails to cross above 1.19, then it may reverse lower to test the 1.1750 and 1.1780 region where the 20-day moving average is placed. There is another falling constraining line within the same region. That line is coming from mid-September, so failure to rebound here may take the price down to 1.6070, 1.17. While lower than that, a key battle could take place around the 200-day moving average, which managed to reject bearish risks back in mid-January. And finally, looking at gold, which is pushing for some extra strength today. Nevertheless, we can see that the 5,000 mark, it's still a struggle for the market. The price moved as high as 5,047 earlier today, but the 5,000 mark, but it still remains constrained within this threshold over here. Now, there are more. The week ahead could face bring extra geopolitical risks into this market, which could consequently add some support in precious metal. But unlike previous times, it seems that the precious metal is still quite constrained despite the upside, despite the positive slope in the technical indicators. So what I would like to see is a clear close above the 5,000 mark before targeting the next barrier near 5,180, and then beyond that, the 5,420 region from the end of January could be the next destination. In the event of a negative reversal, in the event geopolitical risks soften, then in this case, the precious metal may meet its 20-day moving average near the 4,930 region where this ascending line is placed. Below that, the 4,780 region proved to be a key support territory last week, and perhaps it could balance downside pressures ahead of the 46.55 territory and perhaps the 45.60 region where the support trend line is placed. Any declines from here could then neutralize the big picture, pushing the price down to 4,380. So that's everything I want to share with you guys. I hope you liked my video. If you did, please subscribe to this channel. We'll be back on Thursday with more technical updates. So thank you for watching and see you next time. Bye bye for now.